Good morning, traders. This is Perry Wilkie with StartUpTrading.com. It is 9 minutes till 9 a.m. Eastern Time on Tuesday, March 25th. So it's really slow to no news day today. We do have a few things. We have, you know, uh, Kugler's on the mic right now. Then we've got, a little bit of news at 9 o'clock, a little bit of news at 10 o'clock with another Fed head that's at 9:05. Just at a banking at a regional community banking conference. So I don't know if too much is going to come out of that, and then that's really it for the news today. Again, there's not huge news for the week. It's final GDP, not preliminary, on 8:30 on Thursday, and then Friday is core PCE, which could be a three-star event, but those are really the news is in the back end of the week. Looking at where we were yesterday, so basically, uh, 487.50 to 491. Uh, Ish is where we were on the Qs yesterday during the session. And it was just really, you had that little bit of an opening drive up to the 490, and we just kind of oscillated around it, right, from 489 to 491. Minus a buck, plus a buck, and just kind of sat and hung out around there. For the SPY, it was basically between 570 and 575, almost to the penny on both sides for the session. And then really 57.50 is, where you hung your hat uh, as support once you crossed over it. And then we got up to 57.75 during the session yesterday. Uh, and just kind of, going from there. It just, as we get into crossing over between negative gamma and positive gamma, things kind of slow down volatility wise. And that's indeed what is going on here. Looking at the structure from yesterday, the only thing I'm really going to pay attention to are these XS and A lines in all of the indexes. Some of them had more of a substantial tail, like the ES had a bigger tail, uh, and then but I would be very cautious. Uh, you know, Once you get below there, trying to take longs, right? That's where things could flip. So if you do try to take longs, you want to have it on a shorter leash with time and your stops, and you want to see it working fairly quickly with what you want. Or, the smarter thing to do would be to wait until you go under here and wait for, as Jack likes to watch, some fair value gaps or something, some structure to form to give you something to trade off of if you want to go back up long. But, it's potential that we could just flip and go down from there. I'm not saying that's what's going to happen. It's just that, to me, it should be choppy between the excess in yesterday's range, basically, where most of the bars overlapped. It should be a little choppy. Uh, Below there, it could be a little bit more bearish. Keep in mind as we get into what we're looking at, and again, I keep repeating myself here. You can't really see it on this continuous contract, but we got 10 days below basically where we're trading at this 57.75 half was the marker. Yesterday's low was 50, and I have mentioned this that if we're going to remain bullish yesterday, we're not really going to get anything under this point of control. We couldn't even get to the point of control. We missed it by 2 ticks. It was 57.76 was the low for yesterday. So that one still is kind of like skipped over. So that's still going to be your bogey, right? Anytime we start getting 30-minute bars that are opening and closing below that, things could quickly go down to 56.72. Otherwise, anything that's short-lived going back up above it, we're probably just tracing our way up to 58, 51 would be my guess. Looking again, now that we're looking at the specific contracts of the March 25, You can see that that 10-day balance area is below. So I would find it hard to believe we could definitely trade below yesterday's low and get back down towards 57.25 or 5700, which would be 125 points down sometime this week. But I don't think that we can, get below. Uh, I don't think we can really make any progress this week below 5,700 unless things just start falling out of bed. Um, we should kind of start meandering it and building price, time, and volume somewhere between 57.50 and I would say 59.50 with your bogey right here on these lows of January 13th. You can mark those out on your chart just as a flying, but you're going to start seeing that you potentially are going to come into slower resistance from there all the way up till almost 6,050. Is that last breakdown that we had that really started the pivot on March 3rd. That's your bogey. And, everyone who's short long term that was up here in this 3 week shorting area between 60.50 and 62.13, basically they've got their stops just above this 60.53. We're not getting up there today, but there's nothing that says that we just can't start one time framing higher and gap and goes or gap and holds for the session. So uh, that's going to be the same way with the Nasdaq. Just mark that January 13th low up until I would say from there up until 21,640. Those are your lines, and you can see that that same breakdown on March 3rd. You can watch on the Nasdaq as well. That's going to be key on any future uh, retest. That's really the line that needs to be crossed above by the bulls. In between this 10-day balance and this last breakdown, we could just sit here and chop back around in potentially a violent and choppy manner that is hard to read over multiple days. I think the session reads might not actually be too bad. Um, Overnight action only 32 points, and this is the title of my video: small overnight range. And you can see that we did pop up above yesterday's high in the overnight session. Um, Right now we're back just under it on the Nasdaq. We're right above it on the ES, and we're right at it on the Dow. And as I said yesterday, what should happen, and remember, what should happen in the market doesn't always happen, but we should get test up to 20,600 to 20,778. We should start filling in some of this price action this week. And then the same for the ES. We should start really getting up between 5875 to 5900 and get some fills up in here. And then we need to see which side of the auction we want to stay on, because basically from where we are now down to 20,275 and up to 20,600, this is all one auction. So we're right in the middle of this auction basically, and it's the same for the ES and the Dow between basically 5,800, let's call it, up to 5877. Uh, that's all one auction. And for the Dow, you're looking at basically uh, 42,700 to 43,257. Uh, that's all one auction. So we can just kind of traipse around here. It doesn't mean we're gonna, hit those highs and lows today, but this is the area where we could just get some price fills in. And remember, today, we had the 1 or 2 days up, depending on how you count Friday. Uh, but today should be a little bit more telling. I would like to see these excess and A lines tested. This will tell you how many people are trapped in that 10-day balance below and how painful it is for them today and yesterday. If you get below that line, it should be short-lived. I mean, this is where I'm looking to for structure to participate going back to the upside if we get down there. If not, If you're really bared up, you can start looking for structure to form below this line and just trade against it short. I mean, that's really, those should be your pivot lines. And it'll be, like I said, interesting to see if we get down there for that test, and we might not even get down there today. If we get down, we will get down there this week, I think, unless we just keep one time framing and streaking higher, which is a possibility. But uh, as I said, you get down here and then you start getting back above there, that'll be when you can see how many bears are just like shit, right? That they're just chasing up. And to be honest with you, if you get a test down here and it's short lived and you come back across, you take out yesterday's high, you could get fairly close to the top of these auctions that I was just describing a little while ago. I hope this helps. We'll see what Jack's looking at, and I'll talk to you tomorrow.